Hey, good afternoon, everyone. It's 3 o'clock on Thursday, June 23rd. I know we had a lot of volatility today, and so everyone is wondering what happened and why and what's going on and all that stuff. Real quick, I think the main issue is we had fund liquidation, just kind of from a macro sense across all commodities, coupled with a much wetter 6 to 14 day forecast with above normal precip and above normal temperatures, which we know is good for growing. So ahead of this report, I think funds are both are pricing in higher acreage, higher yield, probably less demand. I think they're pricing in the bearish case. So let's walk through the charts, long term, short term, and let's kind of talk through them. I want to start with soybeans because I think they're the scariest and they're the weakest. We talked about this on Market Chat yesterday. If the month of June were to end today, this is what it would look like, which is a massive outside key reversal, and we're taking out the close of 1, 2, 3, 4 prior months in a single month. So that's a really bearish bar right here. What's an outside bar? Outside bar is where you trade above the high of the prior bar and below the low of the prior bar. So that's outside. And a double close means that we're closing below the prior two closes of the bars. So when you see those two together, it's a really significant issue. So is that characteristic for soybeans? Well, yep, it sure is, because here we are in 2012. That's the exact signal that it gave when it peaked before. So soybeans, definitely the weakest of the bunch, okay? Now, here's your weekly chart. It's not quite as bad. The monthly chart is more bearish than the weekly because, as you can see, we really haven't done any significant damage here. Now, if we take out these two lows, and I think you should write these down, take out 1539 and 1576. If both of those fall and we take out our hedge line, then I think soybeans have a much bigger issue. So I think one of the things we got to ask ourselves is this a situation like we had last year? This is the same 2 weeks last year where we had the dramatic fall off from 16.23 down to 13.26, $3 in 3 weeks, and everyone and their dog and cat were screaming, "Hey, this move is done. We can't go higher." And then all of a sudden we reversed it, and now here we are, right? Still at higher levels than where we reversed from before. The answer is I really don't know. This move seems to be a little bit more impulsive. It seems to be more dramatic, and definitely has given up all of its major support levels. So let's look at the daily charts, especially of November, okay? So here's your November beans. Let's make this really simple, and let's let price be our guide. Yesterday or early this week, we didn't like this gap at all, and so we said we need to sell. The last 2 days price action definitely confirms that. But we've come so far so fast, and we've fallen right down into support levels. I wonder if we aren't going to get a little bit of a bounce up to the bottom of the cloud, or maybe all the way through it. Maybe we'll get lucky and it'll even come back up and close this gap. I think we're going to get a rally up into one of these three areas. Call it 1450 to 1460, 1475 to 85, and 1529 to 1535. I don't think that's a trend reversal. I think that's just a counter trend rally. And a lot of times the first major counter trend rally will be really powerful and explosive. And will something materialize to let that happen? I don't know. But I think that's an area we'll need to talk really seriously about whether we need to more aggressively hedge. And I think what's going to help drive that decision for us is what we see in the corn market. Now, where did my corn chart go? Here we go. Oh, right here. Okay. So here is your weekly chart of corn. Well, let's back out and start with monthly so you can see this. Now remember the soybean chart, right? We have an outside bar. Corn we do not. Last week's bar or last month's bar was an inside bar. So we have no reversal pattern here at all on corn. We've taken out no major support, and we haven't done any major technical damage to the corn chart yet, but we have to the beans. So corn needs to either continue to accelerate lower to do some chart damage, or this move's not quite done yet. Now let's drill into the weekly chart. Weekly, it looks even stronger. All corn has done is rally back down into a wave 2 position. It's not given up any major trend line support. We're still above where we were 26 weeks ago, and we have not done any damage here yet. So corn could really surprise a lot of people and move back higher. And what would a catalyst be for that? Well, we talked about it yesterday on Market Chat. Like, pick one from your list. It could be the report next week. It could be something with Ukraine. It could be the fact that the July December spread rallied 22 cents today and got all the way out to 95 July over Dece, and the basis started screaming higher, and is as wild as it's ever been. Which is telling us that the old crop is not there and the USDA needs to revise its balance sheet. There's lots of bullish catalysts that still exist in corn that could really catch people off guard. So now let's dig in a little bit more granular here, okay? I want to show you the weekly chart of December corn. The last weekly chart I showed you is the continuation, which is always the front month. This one is just of December, and as you can see, it's actually the strongest yet. Even though we have a big bar down, we're in a wave 4, we're above the 38.2% retracement level, we're above our daily cloud, we're above where we were 26 weeks ago, and the fast line's above the slow line. Add to that, you've got some bullish fundamentals and really bullish basis levels. The deeper this break gets into the report next week, the longer I want to be, because the surprise will be to the upside, not the downside. Can this be the peak, and can we be done? Yeah, sure, absolutely. The market can do what it wants, and maybe it knows something that we don't know yet. But of all the markets that we're trading, corn is definitely the strongest, and it's the one that needs to bail you out. Now let's look at the daily chart. Okay, here is your December daily chart. We talked about this Tuesday. We talked about this Wednesday, that, hey, it is vulnerable to a move lower. We thought somewhere down into the 670 level. We've exceeded that. Here is the 38.2% retracement level of the entire move from the bottom, which is at 620. If we trade down into here, that's worth buying. You see all of this congestion area right over here, and you see kind of a natural Fibonacci support set up down here. Remember, the reason we think that this could be more bullish is because it's got the balance sheet to support it, and it's got the underlying conditions to warrant it. The forecast, yes, it does look good. Yes, it does look like we can have a nice yield. Guys, we have to have a perfect yield, or we're going to scream higher on corn, because our old crop supply is simply too exhausted in order for us to do anything different with it. So corn is something that we're going to watch really closely, but for now, I think it's okay. If you have short positions on here and they're getting deep into the money, so the 620 area, 630, 620 is an area that I would look to take those positions off, and maybe reposition for re-ownership back to the upside if that happens prior to this report. And then we got to get through next Thursday, Friday, and into the first week of July before we can really make some intelligent decisions on what to do with corn. Because remember, short term, yeah, it doesn't look great. Longer term, it really looks okay, because we haven't quite done enough damage on it yet. All right, now let's jump to wheat. I'm getting a lot of questions on wheat. This is your monthly chart. We've definitely reached targets. We think that there could still be another push higher, but the market is not responding quite the way we'd hoped. But this is the first down month, so like soybeans, this is not a key reversal. We have not traded higher than the prior month, but we have traded lower. This is just price action. It's not anything significant. We are if we were to close here today, we will have taken out the low of the close for the last 3 months, which isn't great. but we also are holding the shelf here. So this area is 995 down to 950 on the continuation chart. And if you look, there's a small gap right here on the monthly chart between the months of February and March where the market could trade down to it, fill it, bounce right off of this, and reverse higher. What would cause that? I have no idea. Probably war, probably the fact that our harvest is still, we haven't harvested more than we thought we would. We've just simply harvested bushels. So, but on the other hand, it's up to you if you want to risk that additional 55, 75 cents in order to let this play out and see if we get a reversal from it, or if you would rather sell it and not care if it works higher from here. If we do reverse this, like let's say corn gets hot because the funds turn around and decide that they've overdone it to the downside, that should spill over into beans because they're cousins. And if corn is trading, $10 in the cash market, or $9.75, and wheat is only $9.50, well, all of a sudden it's in the feed ration, and I don't think we have the supply to warrant that. So the downside of wheat is pretty limited, even though we have the weakness that we've seen over the last few days. So I'm not necessarily saying don't hedge and don't move out lower, and don't move some of that downside. You know yourself, and you know how comfortable you are. If you're nervous, let's sell some. Let's go ahead and defend and protect this level. If you're not too worried about that 50 cents, then let's stay more aggressive and let's let this play out and see what it does. We could come in tomorrow and shoot another video and say, well, that was fun. That ship sailed. Let's hedge it now. Or we could just reverse from here and start working back higher, and the market decides that it got too aggressive too fast. I don't know what's going to happen, but either one of those could happen. So where are we at on the weekly chart? Well, weekly chart doesn't look terrific, but it doesn't look terrible either. This is kind of that 985 to 950 level that we've been talking about, right in here, and we're holding it. We're above our weekly cloud. We're above where we were 26 weeks ago, and we're in an A. We should get a move back higher in order for an opportunity to sell it, or if the fundamentals warrant it, get some reownership on and explode it on up out of here. We'll just have to wait and see what kind of price action we have in order to make that decision. And let's look at our, I'm going to take this to September because July is done. So here's your September chart. Definitely the weakest of the bunch. We're in a clear daily downtrend, right? We're below our cloud. We're below where we were 26 days ago, and we've broken all kinds of support. So if that makes you really nervous and you don't want to hold it and risk that next 50, 75 cents, no shame in selling it. I think we're going to get a bigger bounce and we'll have a more serious conversation about it. But if we don't, then that's kind of the risk that we're talking about taking here. So we can do whatever you want. All you have to do is tell us what your risk preference is, and we can help you get into the position that makes you the most comfortable. Last thing I want to show you is crude oil. Here is your daily continuation chart of crude. It didn't do much today, right? It just kind of sat there and bobbled back and forth. So maybe oil is finding a little bit of support here and would rally, which would also spill over and be helpful to grains. Last but not least, cotton, another bad day in cotton, and certainly this is more exuberant to the downside than we would have liked for it to be, but on the other hand, we're down into chart support, and maybe we'll find a floor. I don't know. I think all eyes have got to be on forecasts and corn in order to decide what's best to do with either of these with any of these charts. All right, I hope that's somewhat helpful to you. It's been 15 minutes. I'll stop rambling now. If you have questions, please call us. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. We will talk to you next week or as needed, depending on market action. Have a great day.